All right, today we're going to move beyond the simple stuff, the basic indicators and strategies that everyone knows. We are going to dive deep into a professional approach, a way to find really high probability trades by mastering this powerful concept called the area of confluence.
So let me ask you something. Does your trading ever feel like just a coin flip? You put on a trade, you cross your fingers, and you just kind of hope for the best? That feeling of uncertainty, that feeling that it's all just guesswork? Well, that's one of the biggest things that holds traders back.
But here's the thing. Successful trading, it isn't about having a crystal ball. It's about building a case. The pros, they act more like detectives. They're out there gathering evidence, gathering clues to stack the odds so much in their favor that the trade becomes a high probability event, not just some random guess.
And the main way they stack those odds is with a concept called confluence. Just think of it like a perfect storm on your chart. It's a single spot, a single price level where a bunch of different, and this is key, independent reasons to take a trade all come together at the same time. This creates an area of massive interest.
So, here's the big mindset shift, okay? You've got to stop looking for that one magic bullet, that one perfect signal. It just doesn't exist. The real power, the real edge, comes from combining several good, solid signals all together. We're not looking for a solo act here. We are building a full-on choir, where all the different voices are singing in perfect harmony right at the same key level.
Okay, so how do we actually build this case? Let's get practical. Our Confluence Toolkit is going to have 3 main tools that we'll use to gather our evidence and find these super high probability zones.
All right, first up, the absolute foundation of market structure, support and resistance. These are simply those horizontal zones on your chart where price has had a strong reaction in the past. You can think of them as price floors and ceilings. They basically represent the market's memory, and believe me, traders pay very, very close attention to them. Next, we need to add a sense of direction and momentum. For that, we use trend lines. When you connect the highs in a downtrend or the lows in an uptrend, you get this really clean, visual guide to where the market is headed. A rising trend line acts like a moving floor, and a falling one, that's your moving ceiling.
And for a third piece of evidence, we're bringing in a big one, the 50-period exponential moving average, or just the 50 EMA. This is a massively popular tool used by big institutions and major trend followers. It acts like a center of gravity for price, giving us another dynamic layer of support or resistance.
Okay, and this is where the magic really happens. See, these aren't just 3 random tools we picked. Each one represents a totally different army of traders. You've got the people who only watch horizontal levels. You've got the trend followers who live and die by their trend lines. And you have the moving average crowd who only care about the 50 EMA. So when a horizontal level, a trend line, and the 50 EMA all cross at the exact same price, you get all 3 of those massive groups staring at the same spot, all ready to pounce. That creates a self-fulfilling prophecy, a recipe for a really powerful move.
So we've got our tools. Now let's see how they actually work together on a chart to find that exact location we're hunting for. We're going to call this our access point. Look, the process is super methodical and simple. First, you find a major horizontal level, step 1. Then, you draw your trend line, step 2. Finally, you put the 50 EMA on your chart, and that spot, that little area where all 3 of those things come together and intersect, that is your access point. That's the zone where the case for your trade is the strongest it can possibly be.
Finding that spot is awesome, but it's really only half the battle. Knowing where a good trade might happen is totally different from knowing when to actually pull the trigger. This is where we take our strategy and turn it into a real, actionable precision entry.
Now here's a technique that pros use all the time. They find that area of confluence, that access point, on a higher time frame, maybe a daily chart. This gives them the big picture, the strategic where. But then they zoom way in, maybe to a 1-hour chart, and they watch that exact same level for a perfect entry signal. This gives them their tactical when.
And that, right there, that is the whole game. It's that simple. You're combining a location that has an incredibly high probability of a reaction with a timing method that lets you get in with a really tight, low-risk precision entry. I mean, it's the best of both worlds. Big picture strategy meeting small picture tactics.
You know, this whole idea really just boils down to this quote.
It's the mindset shift you have to make. You have to stop playing the lottery, hoping for that one perfect signal. Instead, you need to start acting like that investigator, patiently building a powerful case based on multiple, independent pieces of evidence.
So the big takeaway here is that your objective completely changes. You are no longer trying to be a market guesser, a fortune teller. Your job is to become an evidence-based trader. You just wait for all the evidence to stack up in one spot, and then and only then do you act. You become a reactor, not a predictor. So I'm going to leave you with a challenge. The next time you pull up your charts, don't just hunt for a random signal. Instead, look for layers of evidence. Ask yourself, what are all the different groups of traders seeing right now? Where do all their different tools and ideas converge? What story is the evidence on your chart actually telling you?